Hello everyone and welcome to Ticker.com news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We will begin our review of global economy with key releases in the US, Europe, and China. The US trade deficit in goods and services widened to $61.5 billion in September, following an upwardly revised $58.7 billion gap in August, the Bureau of Economic Analysis reported Tuesday. The September increase in the goods and services deficit reflected an increase in the goods deficit of $1.7 billion to $86.3 billion and a decrease in the service surplus of $1.2 billion to $24.8 billion. Imports increased 2.7% from a year ago to $322 billion, and exports rose at a slower 2.2% pace to $261 billion. The deficit with China totaled $24.1 billion. With the European Union, it was $16.8 billion. With Mexico, it was $12.2 billion. With Vietnam, it was $9.4 billion. And with Japan, it rose to $6.9 billion. Retail sales in the euro area decreased by 0.3% in September from the previous month and dropped by 2.9% from a year ago, Eurostat reported Wednesday. Among the largest economies in the currency union, retail sales declined by 0.8% and fell for the fourth consecutive month in a row in Germany, and decreased by 0.4% in Italy and edged lower by 0.8% in the Netherlands. However, sales in France rose by 0.4% and sales in Spain inched up by 0.2%. We now move to China. The Chinese economy is battling an uneven economic recovery after the end of COVID restrictions, and consumers are holding on to their cash because of the ongoing property market woes. China's consumer price index declined 0.2% in October after a flat reading in September, the National Bureau of Statistics reported Thursday. The producer price index accelerated the decline to 2.6% after a 2.5% decline in September, the statistical agency said in a separate report. The measure of wholesale price declined for the 13th month in a row. Chinese prices are signaling a possible price deflation, either at the consumer or at the wholesale level, could continue for a few more months. Moreover, China's trade surplus shrank 27% to $56.5 billion in October after exports and imports declined. We now review global financial markets. The yield on the 10-year U.S. Treasury rebounded near the 5% level after Fed Chair Jerome Powell said that the central bank is not confident that the rates are restrictive enough to bring down inflation to 2%. Gold declined 3%, fell for the second week in a row, dropped to $1,940 an ounce, and the prices were weighed down by a stronger dollar and treasury yields. Crude oil declined 3%, fell for the third week in a row, and dropped to the level before the Hamas attacks as worries of oil supply disruptions eased. Natural gas prices in Europe fell 6% to €47 per megawatt hour and fell for the fourth week in a row because of full storage and strong LNG supplies. The euro hovered at $1.07, the level last seen in mid-September, and investors digested comments from central bankers and rate hike worries resurfaced. The yen hovered at the 151 level against the dollar as investors worried that the differing interest rate stance between the U.S. Federal Reserve and the Bank of Japan may lead to more currency weakness. Stock markets extended gains for the second week in a row in the U.S., and the S&P 500 index advanced for the 8th day in a row, and the Nasdaq Composite gained 9 consecutive days. Market indices pulled back on Thursday but managed to rebound on Friday. Despite the Fed Chairman Jerome Powell reminding investors that policymakers are not confident enough if interest rates are restrictive enough to bring down inflation to 2%. The S&P 500 index and the Nasdaq Composite extended the previous week's gain in the hopes of rate stability. European markets closed mixed on the worries of weak consumer spending and looming economic slowdown. Market indices in Tokyo struggle with the worries of weakening yen and a growing divergence in the interest rate policies of the Bank of Japan and central banks in the US and Europe. Chinese markets extended this year's losses on the worry of a steady outflow of foreign investments. Investors reacted to quarterly results in earnings season as earnings season nears winding down. Moreover, WeWork, once valued at $47 billion, filed Chapter 11 bankruptcy protection after the weakness in commercial real estate market compounded management missteps. Blue Green agreed to be acquired by Hilton Grand Vacations for $1.5 billion. We now review stocks that traded higher after the release of quarterly earnings. Doximity, the healthcare information company, reported better than expected quarterly results, lifted its annual outlook, and launched its first stock buyback plan. Disney, the theme park operator and media company, reported better than expected quarterly results and said it plans to expand its cost reduction plans to $7.5 billion from $5.5 billion. MGM Resorts, the hotel and casino operator, reported better than expected quarterly results, and the company announced its stock repurchase plan. Roblox, the online gaming platform, reported a 38% increase in quarterly sales, a net loss shrank, and gross bookings and daily active users jumped by 20%. TripAdvisor, the online travel platform company, reported an 18% jump in revenue and an 8% increase in earnings in its latest quarter. Uber Technologies reported the second quarterly profit in a row as record riders and drivers used its platform. Revenue rose 11% from a year ago, and passenger trips in the quarter soared 25% from a year ago. Berkshire Hathaway, the reinsurance-anchored diversified conglomerate, reported a surge in quarterly profits and cash swelled to $157 billion from $128 billion a year ago. We now review stocks that traded down after the release of quarterly results. Trade Desk, the edtech company, reported strong quarterly earnings and sales growth and issued a lighter than expected sales outlook because of the transitory weakness in the automotive sector on the ongoing strikes. Wynn Resorts reported a strong rebound in third quarter revenue at its two casinos in Macau, China, and healthy revenue growth at its properties in Las Vegas, but revenue at its Boston property declined. Lyft, the digital ride-hailing company, reported weaker than expected quarterly results and guided that weak bookings are expected to persist in the current quarter. ARM Holdings, the advanced semiconductor chip maker, reported mixed quarterly results and offered a muted outlook for the current quarter, highlighting ongoing challenges in the chip sector. Robinhood Markets, the online trading platform, reported weaker than expected quarterly sales and transaction-based revenues declined 11%. Toast, the restaurant software developer, guided weaker than expected sales growth in the current quarter, but reported strong quarterly results and growth in its gross market volume. Next week, about 400 companies are scheduled to release earnings. Investors are looking ahead to review earnings from Walmart, Target, Home Depot, TJX, Bath and Body Works, Children's Place, Foot Lockers, BJ's Wholesale Club, Cisco, Palo Alto Network, and Applied Materials. You can read daily U.S. and global financial market news, earnings calendar, stock movers, and economic updates on ticker.com and 123jump.com. You can also get latest financial books on Redera.com and keep up with financial industry events on eventsinamerica.com. That's all for this week, and we will see you next week.